welcome again. This is Robert Schein, Managing Director, Partner at Blanke, Schein Wealth Management. Today is December 20th of 2022. We're closing in on year end right now. And over the last weekend, some big changes here in the Blanke Schein Wealth Management business. We physically moved locations. There's a photo behind me. And we're in our new studio right now. But there's a lot of things that still have to happen. A lot of custom furniture and a few other things. We could hear the construction in the background. We have our business up and running, and we've been successful at that and keeping our eye on rebalancing portfolios towards year end from tax purposes, as well as taking the cash and deploying that into the Treasury market, the U.S. Treasury market. We're seeing the most value at that point in time in the U.S. Treasury market today, whether it's the 6 month, which is the highest yield well over 4% right now, even the 1 year, and sometimes the 2 years. So we're going to deploy that cash in client accounts across the board into the Treasury market as we see and head into 2023, where we're cautiously optimistic. We do see the potential for markets to continue their bear market pullback, but we could see in 2023 a reset, the reset then into a new bull market, which would be very welcomed. So we're positioning ourselves to be proactive, but also defensive in the meantime. Now, what the Fed's watching, what we're watching, is what everyone's watching, which is inflation. I've talked a lot about it, so I'm not going to get into it right now, because if you watch the news, that's all they're talking about. I'd like to talk about more about the positioning of the portfolios and sort of what we're doing in year end for our clients proactively. But that being said, the one key indicator that I think markets are closely paying attention to, as we are, is the inverted yield curve. Again, so on the inverted yield curve, where the 2-year Treasury is higher in terms of yield, 4.6% right now, than the 10-year, about 345 on the 10-year U.S. Treasury. That's an 80 plus basis point spread, or an inversion, meaning the shorter yield curve is higher, or interest rates on the short term are higher than the long end. That's, again, why we're positioning in Treasuries on the short end. That's where the most value is right now. But keep in mind, in 2000 and 2008, that's the last 2 times in the last 20 plus years that we had the inverted yield curve. So again, we're setting up for it to be cautious, but again, proactive, because when opportunities present themselves, as they did in March 2020 and April of 2020, we do a strategic rebalance and we take advantage of it, and we see some pretty great results as a result of that. So we're being patient and we're positioning appropriately. We're trying to minimize taxes as best as possible, and we're just taking it day by day as we get closer to the new year. So if you're close to Palm Desert, California, and in the next few weeks you want to stop in and say hello, we welcome you. But we still have some stuff to do around here. We would like to see you in the new year for sure, for face-to-face client meetings. But as of right now, that's the update from the new Blanke Schein Wealth Management Studio on Palm Desert, California, and El Paseo. Take care. Thanks.